for joining. My name's Joanne Kilgour, and I'm the Executive Director of the Ohio River Valley Institute. As we wait for additional people to join, I just want to cover a couple of technical notes. The first is that we will be recording this session for those who are not able to join live. And then following the briefing, we'll send out a copy of the recording as well as the slide deck. In addition, there's closed captioning enabled for accessibility. So if you'd like to turn on closed captions, there's a button at the bottom of your Zoom screen to enable that function. A big thank you to Ben Hunkler, the communications manager for the Ohio River Valley Institute, who's coordinated the event and who's on here today in case you have any technical issues with the meeting or if you have any questions after the program has ended. The format of today's event will begin with remarks from our panelists, after which we'll open the floor to questions from the audience. If you have questions, please feel free to use the Q&A or chat function, and I'll do my best to see that we get through as many as we can in the time allotted. If there are any questions we do not have time to address during this event, we'll be sure to follow up with you directly, and we'll make sure that we document your questions. Okay, so again, thank you for joining us today as we release our new report titled Falling Further Behind: How a Failure to Transition to Green Steel Could Cost U.S. Steelmakers, Western Pennsylvania Communities, and the Environment. Today's report sheds light on how the lagging U.S. primary steel industry risks falling further behind in a rapidly decarbonizing global market absent large-scale investment in a transition to low or zero emissions green steelmaking. We're joined today by the authors of this report, our Industrial Decarbonization Program Manager, Justine Hackemer, Senior Researcher and Economist, Nick Messenger, and Research Fellow, Kathy Hipple. We're also joined today by our Senior Communications Strategist, Virginia Alvino Young, who will share some complementary insights from her communications research. Thank you again for joining us, and I'm very pleased now to turn the mic over to Nick Messenger.
Good afternoon, everyone. Thanks for taking the time to join us today. We're super excited about this report, and some of you may have joined us a couple of years ago when we first released a report on green steel and decarbonizing the steel industry. And as I'll talk about here briefly, the conclusions of that report were pretty optimistic. So we were at the time looking at a kind of continued downward trend in domestic primary steel manufacturing jobs in the region. And we put together some modeling back then that looked at what would it look like to make this transition that would involve building out green hydrogen infrastructure, renewable energy infrastructure to support decarbonizing steelmaking. And what we concluded was that that had the potential to not only kind of blunt the decline of the traditional steel industry's jobs in the region, but also actually support more broadly 27 to 43% more jobs over the next 10 years, or over the just 2021, so over the 10-year window at the time of that report. We also looked at how that could cut Pennsylvania's industrial sector emissions by 4 million metric tons of CO2 equivalents per year, which, using various research that's been peer reviewed out there for what the benefit of that is in dollar terms, saving the state $380 million in health, community, and environmental costs associated with the emissions from traditional primary steelmaking. A lot has changed since 2021. Normally, I don't think we do an update to such a big report so quickly, but it's been a whirlwind. We've had a contentious U.S. election cycle and a pendulum swing in administrative priorities in Washington. That has brought about a new tariff regime and kind of a shock to the global trade system that I think a lot of the industry is still working through. We've seen a bid and accepted bid and then kind of stymied and then approved again to acquire U.S. Steel by the Japanese company Nippon. We've seen a collapse in Chinese real estate markets and the associated construction boom that was responsible at the time for a lot of the steel industry's demand globally. We've also seen Europe continue on a trajectory towards emissions reduction and decarbonization, including the implementation of a border adjustment mechanism, which essentially puts some sort of import tax onto things relative to the carbon content or the emissions content of the import. And then we've seen a passage this summer of the One Big Beautiful Bill Act, which was a large legislative change that dismantled and reversed some of the key decarbonization incentives, such as the tax credit pieces that were part of the Inflation Reduction Act, which was kind of the paradigm our original report was written under. So, with that said, we're going to go through today some of the major changes in how we view these in relationship to the steel industry and particularly to decarbonizing the primary steel industry in the United States. So we're going to walk through, and the hope here is that this report and our presentation puts a lot of these different puzzle pieces in one location for folks who are working through these issues and folks who are connected to the steel industry and folks who care deeply about the decarbonization efforts that are ongoing in the region. So with that, I'll turn it over to Kathy, who will talk a little bit about the global perspective of decarbonized steel.
So in working on this report, we didn't want to focus so much on China, except that China is both the biggest producer in the world of primary steel and steel. It's also, until recently, the biggest consumer, and it still is a huge consumer. And so to ignore the role of China and Greater Asia in the role of steel production and how that affects demand in the United States and then production, it's too big to ignore. So our conclusion is that recent legislative changes that especially have sought to undo much of the federal government's investment in industrial decarbonization, the reversal of the IRA, and taking some of the pieces of some of the tax incentives, implicitly risks doubling down on traditional primary steel making. And the industrial decarbonization efforts were so important to our first report. And when we started this, before we saw what was happening, we were still focusing on what would happen if we could apply some of the tax incentives. The US has already lost considerable ground to China and other Asian producers. And the title of our report is "The Longer We Wait, the Further Behind the United States Will Be." Here you can really see a graph, and you really do see that the United States, which includes the United States and Canada, is way at the bottom, producing only about 4% or 5% of global steel. China, since 2007 or 8, has moved to the 50%, and while it's stabilized there, you can see the gap between Chinese production and the rest of the world. China is over 50%, about 53, 54%, and then the rest of Asia is around 20%. The EU has declined somewhat since 2008, as has the United States and Canada. The global steel market is shifting. Steel prices and demand have taken a downturn in recent years as China's real estate bust and the construction boom has chilled. This is continuing with China's consumption of steel taking a slight decline over the past few years, although it still consumes a tremendous amount of steel. But this has caused a global glut of cheap Chinese steel, and this has not directly impacted the United States because the US imports relatively little steel from China, but it has disrupted the global market for steel, and it's made profitable operations more challenging for American steelmakers, even though, as mentioned, the US imports little steel directly from China. And the reality is there are many reasons for the issues that the United States steelmakers, the domestic steelmakers, have had that have caused them to lose jobs and lose production. And we don't want to sound like we're China bashing, but again, when a country is producing on the global stage as much as China has, we can't ignore it either. Tariffs, you really just can't talk about the steel industry without talking about tariffs. And Justine has done a wonderful job of going back. This is not a brand new thing for the United States to be imposing steel on tariffs on steel. It has a long history, but this year it's created additional uncertainty, and that may help steelmakers, domestic steelmakers in the short term. But remember, steel is really an input into so many other products, particularly auto and the construction industry. So it could have this longer term way of dampening demand by creating headwinds for the broader economy, especially the places like the industries that use steel as their primary input. So again, just this is a bit of a repeat, the steel landscape. This is the share of global steel production. You can really see it goes back to when China joined the WTO in 2000, that it became one of the industries that the government was truly supporting. And they went from having a modest proportion of maybe 15% of the global production to over 50% today. So looking at a longer term, it coincided with when the United States began a decline. But again, we don't want to sound like there are many, many reasons the domestic steel industry has had problems. And only one of them is because of the amount of Chinese production. And with that, I will turn it over to Nick, who loves to talk about the number of jobs in all of these codes and what has happened.
Yeah, so I think coming back around to, well, why do we care that the United States is producing a lower share of primary steel, or why might it be interesting that China's producing more? Steel is steel, right? And the answer really lies in a couple things. One, obviously, domestic security of supply chains, which we saw during COVID, having an onshore, in-house, so to speak, pipeline for all those other industries that Kathy mentioned, automotive, appliances, construction, steel, is important. But the real reason that average Americans care about the steel industry, particularly in places like Pittsburgh, Pennsylvania, Gary, Indiana, is that it supports a wide number of jobs traditionally, right? The Pittsburgh Steelers, it's part of the identity of our region in Western Pennsylvania to have the steel industry so intimately linked to our culture. And part of that is because these jobs are incomes for households, and those households then spend those incomes into the economy and support a wider variety of jobs. I often compare it to, if you drop a stone into a still pond, you create a bunch of rippling rings outward, right? And so the steel industry really traditionally, historically, has been that big stone for Western Pennsylvania, right? We drop it in the pond and we get a large set of ripple rings that emanate outward, and positive economic effects from that stone. The problem is that that stone has been shrinking for several decades now. Really, since the 70s, we've seen the steel industry decline by almost 50,000 jobs across the country. As our 23 report noted, a lot of these job losses occurred in primary steel communities, Western Pennsylvania and Gary, Indiana, as I mentioned, which are places where U.S. Steel has had large factory presences throughout the 20th century and into the 21st century. So this graph just kind of showcases that, right? You see the dotted line there in the late 80s when Nucor built the first EAF mill. And we've seen the decline, right, of primary steel employment across the United States over the last several decades, down from a peak of somewhere around 185,000 jobs, almost 190,000 jobs, down to about 85,000 jobs as of 2024. So just a tremendous decline in primary steelmaking. Now, Kathy mentioned the rise of China and the influx of just large quantities of very cheaply made steel, cheaply not reflecting its quality, but cheaply reflecting the cost to make it for China has been heavily subsidized by the Chinese government, low wages, that type of thing. The other thing to note here is that the competition for steel jobs in Pennsylvania is not just a factor of China, but also domestic competition. We've seen steel operations move towards scrap steel or towards mini mill production, particularly in southern states like Arkansas, or I guess West Virginia, I wouldn't consider southern, but we've seen West Virginia get a rise in steelmaking. Louisiana, a lot of these places are getting steel production, and it's hard to ignore the right to work nature of those states, or the cheaper labor costs inherent in some of the southern states is probably a motivating factor for some of those decisions by companies to locate there. The other thing that you can't talk about the steel industry without mentioning is automation. As we move forward every day these days with AI in our lives, but this is a trend that has happened over decades in the steel industry, with machinery, automation, equipment becoming more efficient, requiring fewer and fewer human workers with good salaries to function and produce the same amount or sometimes even more steel. So it's important to remember that a decline in employment doesn't necessarily always mean a decline in production. That production can move elsewhere in the United States, or that production can happen sometimes with less human labor required to produce it. Either way, the result is the same. Fewer primary steel jobs in the United States, and particularly in Pennsylvania, means fewer incomes for households in those industries, which means less money being spent into the regional economy, which is never something you want when you're thinking about economic development. Um, and we can kind of get a picture of how the capacity utilization has changed. So I mentioned automation. I mentioned the construction of facilities in the South. The Federal Reserve Bank keeps track of what it calls capacity utilization, which basically just means if we had to max out, right? If we had to use every factory, every piece of equipment we have on file in the United States to make primary steel, what percentage of that are we currently using? And we can see that it's relatively consistent over time. We see a large dip in 2020, right? A lot of industries dialed down production in 2020 because there was so much uncertainty and so few people buying and building things during the pandemic. We see after 2020, it ramps back up, right? We start using some of those factories, they reopen, we start producing more. It's generally hovered over the last few years just under 80% or just above 70%, which means we have somewhere between 20 and 30% more capacity to produce in the economy in the United States to produce steel than we are currently using. We've been working on this report for so long now with so many shifting winds and news stories that we've had to update this number 4 or 5 times over the last few months. But the most recent measurement has it at about 76 or 77% capacity, according to the Federal Reserve Bank, which means we're not using all of the capacity that we currently have in the US. And then finally, the other piece of this puzzle that Kathy mentioned a little bit are prices. We can sit here and wish all we want for more steel employment to come to the region, or for more capacity utilization, open up and turn on more equipment to make more steel and hire more workers, and let's get the engine roaring. But the reality is that those decisions are made by companies like US Steel or Cleveland Cliffs or whoever, based on prices. And prices really determine whether or not there's a margin to operate, whether or not they want to operate. The cost outweighs the benefit sometimes, right? If the price is too low. And so this kind of gives you an idea of the prices for cold rolled products and hot rolled products over time since the 2019 and then through the pandemic. We can see there's a huge spike in cold rolled products during the pandemic. And immediately after, as things reopen, right, we all remember that high inflationary environment in 2021 and 22, right? There were a lot of people wanting to make up for lost time from the pandemic. We want to build more. We want to buy cars. We've got a shortage in car production. You know, we're trying to build things made out of steel as fast as we can. We're trying to make steel as fast as we can, right? And we see this bump in prices then. But really, for the last 2 years, these have sort of leveled off. It's important to note that they've still maintained above pre-pandemic pricing levels, right? Part of that's going to be inflation. And this is from the Producer Price Index, which, if you've watched a news story about inflation, you've probably heard of the Consumer Price Index. That measures inflation by going out to the store essentially, right? And figuring out how much do eggs and bread and TVs cost this month versus last month. The producer price index looks at what companies pay for intermediates essentially, right? It's a little more complicated, but that kind of gives you the picture of if I'm an automaker and I need to buy steel, what am I paying for that steel today versus what have I paid for that steel in the past, right? When I've wanted to purchase it from a steelmaker. So the price story is intricately tied to tariffs. And there's a long history in the United States of the steel industry and tariffs and wanting to make sure that prices effectively in the United States don't fall too low, subject to this large global supply, particularly from China in the 2000s. So I think that's the end of the kind of economic slides, and I'll turn it over to Justine to talk a little bit about the opportunity from green steel and touch on some of the other pieces of the puzzle.
Well, thanks, Nick. Yeah, Nick and Kathy discussed how we got to this moment. And the big question now for places like the Mon Valley and like Gary, Indiana, is what does the future of iron and steel making look like in these communities? And will these historic steel towns be part of the global transition to clean steel? Because rather than continuing business as usual, emerging global demand for low carbon green steel can create new market opportunities for steelmakers. And many regions of the world have pressed ahead with investments both in decarbonizing industries like steelmaking and also in investing in green hydrogen technology. In Europe, you also have the implementation of import fees that account for the emissions intensity of products under what's known as the EU's Carbon Border Adjustment Mechanism, or CBAM. And so this will hurt the competitiveness of high emissions intensity, traditionally made steel in European markets, where the US is already ranking outside of the top 10 importing nations. And while you may think, well, then who cares? The US already isn't cracking the top 10. It's not a big export market. The EU is a very large export market for other countries' steel exports. And because of that, they will be decarbonizing their industries to be competitive under these regulations. Thanks, Ben. So the twin pressures of European intervention, as well as consumer demand and emerging green premiums, have been enough to initiate at least some decarbonization efforts in other countries. According to a recent BCC market study, global green steel markets are projected to grow from $7.4 billion in 2024 to $19.4 billion by 2029. So that's a compound annual growth rate of 21.4%. But still, that only represents just 1.2% of the global steel market size in 2024. So that suggests that there's still plenty of room for continued growth into the middle of the century. And regions and countries are investing in low carbon technologies like hydrogen-based direct reduction of iron, or DRI, and electric arc furnaces. And progress varies due to factors like energy availability and economic conditions, but the green steel transition is gaining momentum across continents. And the transformation is not only crucial for reducing emissions from one of the most carbon-intensive industries, but also for supporting clean energy and sustainable infrastructure development worldwide. Unfortunately, our co-author, Irina Spector, could not join us for today's presentation, but included in the report is a really excellent roundup that she put together of green steel projects that are advancing, and that provides more detail on where things stand today. I'm not going to go through each one during the short time that we have, but looking at the projects that are advancing, China remains a leader in emissions reduction efforts. They've upgraded over 600 million metric tons of steel capacity to ultra-low emissions technologies between 2019 and the middle of 2024. Europe is still a front runner too in green steel innovation, and this year is pivotal as the EU advances industrial transition with the Clean Industrial Deal and the Steel and Metals Action Plan. And both of those are set to impact the steel sector directly. And the European steel industry has received support from the European government and financial institutions to advance decarbonization. Go to the next slide, please. But turning back to the US, despite a reduction in federal subsidies for decarbonization work, there are still domestic opportunities for a conversion to DRI and EAF technologies that would lay the groundwork for the US to be competitive in the low emission steel market. The recent sale of US Steel to Nippon, which is Japan's largest steelmaker, offers some potential opportunity to reverse course and invest in modernizing primary steelmaking. Combining Nippon's financial resources, U.S. Steel's iron ore assets, and the renewable energy potential in the U.S. could open up new possibilities for producing low-emission steel, especially as demand grows in industries like automotive manufacturing. And we are seeing those demand signs in the U.S. Hyundai is planning to build a green steel facility in Louisiana to feed its own U.S. automotive production. So, demand is moving in that direction and not waiting on the existing U.S. primary steel industry to transition. As part of its agreement to acquire U.S. Steel, Nippon is committed to invest nearly $11 billion in U.S. Steel's operations through 2028. And this includes commitments to spend $5.5 billion between the Mon Valley Works in Pennsylvania and the Gary Works in Gary, Indiana over the next 3 years. So we still don't know the full extent of investment plans, but we did get some more details this week. U.S. Steel said it will construct a new hot strip mill at the Mon Valley Edgar Thomson Works in Braddock. So this would replace a current hot strip mill located in the Irvin Works in West Mifflin that was installed in 1938. The company also previously announced it plans to spend $100 million to construct a slag recycler at Edgar Thomson, which will allow it to commercialize waste it typically sends to a landfill. So, of these two projects that have been announced, neither indicate a massive change at the Mon Valley's upstream operations. But this slide here shows a breakdown of the committed spending by facility as disclosed by U.S. Steel and Nippon to the U.S. Securities and Exchange Commission. So again, based on these numbers and what's been announced so far, it does not indicate a large-scale transition to green steel in the Mon Valley. And in fact, the company has signaled that it will double down on coal-based production with plans to reline the largest blast furnace at the Gary Works in Indiana next year. And this reline also impacts the Mon Valley as the coke needed to feed the furnaces at Gary is produced at Clairton. So that indicates the coke production will be continuing in the Mon Valley. You can see on this chart there is $1 billion on there for a new mini mill to be built in a location to be determined. So that could end up in the Mon Valley. But from what we've seen in recent years, U.S. Steel has been adding new capacity at its Big River Steel operations in Arkansas. Since acquiring Big River Steel in 2021, U.S. Steel has doubled the capacity at the non-union EAF mill. It's also made significant investment to produce electrical steel for EV engines there. And these are products that had historically only been produced by blast furnaces. Aside from a recent Nippon investor presentation indicates they could be planning to construct a DRI facility in Arkansas, though that hasn't been confirmed. So, when U.S. Steel is talking about its new era of growth and investment, which it says includes producing the higher value, lower emission steel products, big question is, will these products be made with union labor in historic steel communities like the Mon Valley and Gary? Because if they aren't, then we need to be asking, what do the Mon Valley steel jobs look like in the future? Because I also think it's fair to say that if you live in Clairton, you don't really care that the company is identifying, initiatives to save money if it does nothing to reduce emissions and improve community safety. And a lot of times what you hear about the transition to clean or green steel is that it's very capital intensive, but everything in the steel industry is capital intensive, and so is continuing the status quo. A blast furnace reline can cost anywhere from an estimated $300 million all the way up to $1 billion, but and this would be on a 15 to 25-year cycle basis. U.S. Steel has estimated the cost for the reline at Gary to be around $300 million. And so, one of the big concerns for historic steel towns is that pursuing a reline rather than modernizing the facilities will place heightened pressure on steel workers and local communities downstream of the steel supply chain, whose jobs, families, and livelihoods rely on maintaining the historic competitiveness of the U.S. primary steel industry. And with such long lifespans, relines can also pose a risk that these facilities could become stranded assets amid tightening climate regulations. And even more concerning for the communities and workers, continuing business as usual operations without adequate investment in maintaining and modernizing facilities can leave these plants vulnerable to breakdowns and incidents that can impact the health of workers and the larger community. In the Pittsburgh region, Mon Valley, there was the August 11th explosion at the Mon Valley's Clairton Coke plant. It killed 2 workers and injured 10 more. So, that really puts into perspective what the risks are. As Nick said at the top of the presentation, Orvie's prior research has shown that shifting away from steel made by dirty fossil fuels to virtually emissions-free green steel is possible here, and it can be an economic driver for the Mon Valley. It requires capital and political will, but the payoff is cleaner air, safer operations, and stronger competitiveness. And with the right investment, we could lead in this transition, powered by clean energy, infrastructure that supports both steelmaking and downstream industries. So, right now, the industry currently has the highest and most expansive steel tariffs in place. We have an infusion of capital coming from Nippon. So it is the time to think about what the long-term future looks like for steelmaking in the Mon Valley. Policy support at a federal, state, local level could encourage the needed investment and modernization. And while Nippon is still largely focused on coal-based production, with the backing of Japan's government, it recently announced it will convert a portion of its steelmaking process in Japan from blast furnace to hydrogen DRI-EAF. So that signals that it could be moved to invest in the technology in the US should the right support or incentives be put into place. Next slide, please. So just to kind of wrap things up, and I should say in the report, there's so much more on tariffs. There's more on the policy. We really tried to dig into as many things as we could that are affecting steel right now. So to save time, I'm not going to go into all of those things, but happy to answer any questions. But in conclusion, it is increasingly clear that one step forward, three steps back is an untenable decarbonization policy if the US wants to lead the future of steel production. Europe and Asia will not wait for the United States to pave the way when it comes to emissions reductions from industrial sectors such as steel, and delays in the US may only serve to further increase Chinese market share. China's move away from the blast furnaces provides at least some signal that its government is eyeing a future in which low emissions green steel is not just an environmental luxury, but a valuable global commodity. And in order to compete, the US has to begin to view green steel in the same way and make investments for the long-term future. So thank you so much for your time today, and I'll be happy to answer any questions that you have at the end.
Thank you so much, Justine, Kathy, and Nick. Really appreciate you being here to share these insights from the report. And as Justine said, there's so much more in the report itself. So really encourage everyone to use that as a resource in your own work. And now it's my pleasure to invite Virginia Alvino-Young to share some top-line findings from her communications research. Virginia.
Hey, thanks so much. This is a sort of complementary endeavor that, we were just thinking, how do people living kind of in and around near the steel industry feel about modernization, the industry overall, community safety concerns? So we conducted an audience understanding survey that was out in the field just last month in October, that was conducted via Grow Progress, which sources participants from a variety of different digital platforms, but they do all come via a digital means. So we limited the geography to, as you can see here, really the western portion of the state here, which is congressional districts 12 through 17. And we'll go over just some top-line findings here. So when we asked how important do you think it is for the steel industry to modernize so that steel manufacturing is cleaner and safer, you can see near overwhelming consensus here that 9 in 10 folks in the region say that steel modernization is either somewhat or very important. That's pretty stunning for any kind of question we could ask folks, but to take a look at who is within each of those groups, it really spans all kinds of demographic lines. So you can see here among respondents that said very important, among respondents that said somewhat important, you've got, a pretty even gender divide here. If we look at the next slide, you can see that there's also a fairly evenly split partisan divide. You see a higher number of net Republicans. The congressional districts that we surveyed there is a higher portion of primarily Republican districts, but you can see here that among the participants, there was still a pretty even divide. And as we'll get into some of the other more granular responses, a lot of these sentiments seem to really cross these party and demographic lines. When folks were asked, well, why did you answer the way that you answered? What makes you think so? One of the top referenced reasons was reducing pollution and environmental harm. And it's folks were really able to articulate a wide variety of types of concerns here, from both immediate impact, this is the air that I breathe and the water that we rely on, to kind of broader implications of taking care of our planet and ensuring a kind of livable future for future generations. Folks also referenced, again, without prompt, kind of worker safety and health. Plenty of folks referencing either direct experience or kind of, being related to folks that have worked in the steel industry over the generations here in the region, and able to articulate, again, a variety of concerns, leading them to respond with yes, and modernization is very important. We also saw a good amount of responses in these open-ended inquiries about industry competitiveness and sustainability. Well, we need to be moving our operations of any of our prominent industries into the 21st century if we want to maintain that kind of economic competitiveness. And then we also saw a good portion of responses that reference just kind of the local economic impact. We want to make sure that these jobs stick around and don't go anywhere. If you're wondering where folks were coming from that were not supportive of modernization, I will say that a lot of that could be characterized as either sort of disengagement from the issue at hand, or one issue that we saw referenced was concern that modernization could really mean automation, right? So kind of conflating the issue of modernizing production with potentially job loss or even kind of higher consumer costs, right? Things that might be a little bit of a backlash to any proposed investment, but that was a very small portion of responses. We also asked folks, who do they think should pay for these types of investments? And you can see here, 52% believe it should be a partnership between both the government and the steel industry, jointly investing to modernize and create safer steel manufacturing. That's followed by primarily the steel industry. There's a much smaller portion of folks who believe that, primarily the government should be on the hook for these type of capital investments. We asked folks about keeping steel in PA. We wanted to get at some of the cultural identity and attachment issues that Nick had mentioned. Again, it's about 9 in 10 folks in the region that say it's either very important or somewhat important to keep steel in PA. We were able to look into some of the kind of values that folks are connecting with the issue, this kind of family history, identity, sense of place. There's this kind of emotional piece, but there's also some sort of economic loyalty and a belief that this industry is really necessary to keep our region going. Again, what would we be without we had the Steelers are in the name, right? It's hard to, I think, for a lot of folks to imagine a future of Western Pennsylvania that doesn't have the industry available in that way to them. Worker safety, 81% here expressing net concerned about the safety of workers, specifically at steel manufacturing facilities. In the kind of open-ended prompts that folks are given afterwards, the disaster in Clairton is certainly top of mind. People in the region seem to be aware of and retained a great deal of impact from that news story. And I'll also say, folks really identify with living kind of in the steel region, whether they live, kind of down the block from Clairton or, even a couple of hours away. They say this is happening near me and it's something that I care about. Next, you'll see subsequently asking about the safety of communities nearby, also solicited a lot of references to the explosion and a lot of feeling like folks really are nearby and that this is my community, and really identifying with that, even if they're a little bit farther removed. So just some key takeaways here. Again, overwhelming support among Western Pennsylvanians for modernizing steel manufacturing, and that doesn't seem to fall along any kind of particular demographic or party line. Folks are referencing pollution, worker safety, they're referencing economic competitiveness and the need to kind of sustain local jobs. Folks, again, across party lines, articulating a wide variety of types of environmental concerns and direct impact, and also a great deal of desire for steel production to continue in the region. Thank you so much. You'll get a brief memo with some of these top line findings as well, but I'd be happy to answer any other questions about the work. Thanks.
Thank you so much, Virginia. That was really a hugely helpful complement to the research and the report presented. A reminder to audience members, if you have questions, please feel free to put them in the chat or the Q&A, and we're happy to field answers to them. I will start out just by asking Kathy, I want to ask you a question about what you think local decision makers should take away from the report. You know, we kind of have had this global perspective on the steel industry down to Nick's assessment of jobs and Justine's assessment of what we know so far about the investments that Nippon has promised. But if you were sitting in the Mon Valley, what would you be thinking given all this information?
Well, I think, and thank you to my co-authors, and a nod to Irina, who's not able to be on the call with us, but the rest of the world is not going to stop. And we were so optimistic about our last report that moving in a forward direction could give Western Pennsylvania the opportunity for a first mover advantage and building a hub around a manufacturing renaissance and putting green steel at the forefront of an emerging industry. I mean, this, as you could even see from that world map, we're at the forefront of this. This is not as if we're that far behind at this point, but by not investing, we will fall further behind. And looking backward is not the answer. And I think, as Justine mentioned, a reline can cost hundreds of millions of dollars. So when we have this opportunity right now where Nippon has a golden share in this company, and the United States government has a seat at the table, this is really a chance for the US federal government, but more the state and local government to come together to allow the United States to take a leadership position in this industry that we all know is critical. There's a part of the report where we talk about it is important to make what's called primary or virgin steel, that the mini mills can make some kind of steel using recycled scrap metal, but they can't make all of the steel we need. And the United States wants to continue to make primary steel for our critical needs for primary steel. And why shouldn't the United States take a leadership position? And more importantly, I mean, if you just, not just the name of this, you know, we've got Andrew Carnegie, we've got Carnegie, you know, all over the place. So it almost seems silly that we wouldn't say we've got this legacy information. We've got a way from the Iron Range to come through the lakes, and there are, you know, 100-year-old ways that this has happened. We have this knowledge, this legacy knowledge from having had the steel industry in the heart of our state. So why shouldn't we move forward in this way? So I would do a bit of a, you know, we have this great opportunity, and if we don't do it, we'll fall further behind. So it's a little bit like a carrot and a stick, or the opportunity, but then the opportunity will fade away if we don't move quickly.
Thank you so much. Justine, I know that you mentioned reviewing the parts of US Steel's updated investment plan that they announced earlier this week, and you talked a little bit about how those align with the findings of the report, but could you just reiterate for us what we learned and what that indicates in terms of the current trajectory of this deal for the Mon Valley?
Sure, yeah. So the projects that have been announced are a new hot strip mill that they will be building in Braddock, which is where they have the steel making, where the blast furnace is. So, if you're going to be rolling steel, assume you're still making steel. So that signals that they're going to continue steel production. But we've not heard any plans to dramatically change the way that they're making steel, or anything further upstream at the Clairton Coke Works. I did see there was some local reporting that they were planning investments at Clairton, but again, we've not heard anything, don't have any details there. So, the investment there in the rolling mill signals, they'll continue to have a presence here, but the question is, what does that upstream steel making, iron making look like? They've also announced that they are going to spend $100 million on a slag recycling facility at Edgar Thomson. So that would take the slag that is produced, it's a waste product that they have right now that is just in open pits, and is taken away to landfills. So this will allow it to be recycled, but it's a way to commercialize waste. It's not really anything that is going to significantly make the steel making process itself greener. It is a cleaner material used in the production of cement and concrete, but for steel making itself, at least my understanding is that I don't think that we would see a huge change.
Thank you. And Nick, a question for you, from the perspective of an economist, how would you describe the economics of the opportunity presented by the investments that we've heard so far are being promised by Nippon?
Yeah, I think that if you zoom out, any time that you are not competitive, right, which we've kind of made the case that over the last several decades, the US has become less competitive than China in terms of primary steelmaking on a global scale. Anytime you have an opportunity to disrupt that system economically, right? By moving to a new technology, and as Kathy mentioned, being one of the early adopters of that new technology, being one of the first countries or companies based in the United States that goes through that transition and starts producing early, right? Think about how the United States gained advantage in the automobile, right? We were one of the first internal combustion engine, manufacturers at scale, and it really paved the way for leading the 20th century economically for the country. So the opportunity of having a large external force come in, right? I think there were a lot of folks who were looking at the transition between the Biden administration and the Trump administration, the repeal and kind of replacement and early sunsetting of some of the IRA incentives, as doom and gloom, saying, right, like, well, all this money that we were going to use to do decarbonization in the steel industry is now drying up, right? The federal government doesn't want to do this. It's never going to happen. There's not resources for it, right? And suddenly this investment from Nippon presents a new source of capital to achieve those things, right, at some scale. So I think that it is a little silly to sit back and hope, well, hopefully the companies just decide to do it on their own, right? No company is going to maximize its own profits and revenue by making these huge investments kind of on a whim and taking on that risk. But as Kathy mentioned, a partnership between the US government and Nippon saying, hey, if you're going to come in and make these investments, we need to be making them in a strategic way to lead the future, not try to play catch up to China and what Asia has been doing for the last, Asian steel producers have been doing for the last 20 or 30 years. So it's a long answer, but I think that there's a little bit of a life raft visualization in my mind, right? To say, well, okay, the IRA stuff is drying up, but the US has actually created or found this new opportunity in the acquisition to modernize some of these facilities, and have the capital available to do it.
Thank you. And a question for you, Virginia. I know you've done a lot of communications research within the region, and I wonder if anything in this surprised you when you started getting the results back.
I think yeah, thanks. I think it's really important when looking at results like this to understand our own kind of personal perspectives, identities, lenses, and biases that we bring to the data. You know, it's impossible, I think, to be completely objective in some of these ways, but I think sometimes we bring our own kind of expectations of folks, specifically along kind of party lines, right? I think it's easy to think that because these lines are so sharp, in our experience of like everyday kind of news stories, policy issues, we think that they tend to really be monolithic blocks, right? Or identify one issue as mattering to one party more than the other. But I think when you break it down and when you look at folks here in the region specifically, a lot of what we were asking about seemed to strike a tone across the board of just being kind of common sense, right? It's very highly palatable to say to folks, you know, we want things to be safer. We want things to be cleaner. People may kind of bring their own preconceived ideas of what the trade-offs may be, and that's a really important kind of messaging consideration for any policy development effort or modernization effort. But I think a big takeaway, whether it's kind of, you know, surprising or not, is that there really is a whole lot of agreement in the region of what we would like to see. We would like to see strong, good jobs. We would like to see safe, healthy, thriving, prosperous communities. And that doesn't know any kind of bounds in terms of identity.
Thank you. Well, a final thank you to Ben Hunkler for all of your work on this project and putting us all together here today, to Virginia for sharing these really useful insights, and to our report authors, Justine, Kathy, and Nick, for your work in putting together what is a very helpful resource for this moment in steel industry work. And also thanks to all of our attendees. We really appreciate your participation and look forward to continuing to engage with you as we move forward. So thanks all very much.